So the first theme is the financial inclusiveness theme. In the financial inclusiveness theme, what we are trying to play is the huge opportunity in the retail credit penetration in India. The retail credit penetration in India is still far below compared to some of the developing economies as well as the Asian countries. We have played this in the past in large caps using private sector banks. We have seen private sector banks like HDFC Bank growing for multiple years by creating a good retail franchisee, both on the liability side as well as on the credit card and personal loan side. By playing this theme, these companies have created a meaningful ROA much superior than the PSU banks in the long term, and this has helped in a huge market cap growth for the private sector banks. So this is one theme that we play. The second theme that we try to play is in the mid and small cap space in the financial inclusiveness side. What we try to avoid is we don't want to invest into any business here which is competing with the private sector banks or a PSU bank from a cost perspective as well as on the asset side. So it is predominantly NBFCs or the small banks who have an NBFC sort of an asset book. So the yield is higher and it is the ROIs are much higher, and the key here is that they are trying to shift people from the unorganized lending to organized lending by giving a flexible tenor as well as lower interest cost. So the EMI still remains the same, but just that the borrower tends to pay it over a longer period of time. This opportunity, in our opinion, is well played by some of these NBFCs and small finance banks, and they have created a good business model around it. Good thing is these companies have potential given the huge opportunity that they can grow by more than 25% for a 5 to 10 year time period. And also they have shown in the past that they are able to underwrite these loans at a very low credit cost in the previous cycles. So the key is that you have fast growing financial services companies, but also you have companies who have managed to underwrite it and keep the credit cost lower, and that leads to a good profitability growth from a long-term perspective in these businesses. So the financial inclusiveness is about playing one bucket of private sector banks as well as some of this mid and small cap bank or NBFCs who are playing into this unorganized to organized retail shifting. So to give a further explanation to the second bucket that we said in the financial inclusiveness about playing the unorganized lending to organized lending, let me give you an example with AU Small Finance Bank. The key is AU Small Finance Bank as an NBFC sort of an asset book, but on the liability side, after becoming a bank, it has spent a lot of money to increase its CASA deposit. So just imagine this and compare with other NBFCs in the same space. It is predominantly into vehicle financing and small business loans. So here the NBFCs, say Cholamandalam or even a Sriram City Union or a Sriram Transport Finance, compared to these companies now, AU Small Finance Bank will be able to lend at a much lower rate given the CASA deposit that it is rising, and compete with them for a longer period to come. We like such opportunities that you have a banking license but you are competing with NBFCs. That really puts you into a very good sweet spot, and you are into sectors where the growth opportunities are for a long period to come. So those are the kind of opportunities that we are looking for.